any company in their conference call when they report earnings that mentions AI automatically gets a bid. It's kind of the hot thing to talk about right now. Now, if we recall, we saw the same thing happen many times historically, right? Going back to the beginning of my trading career, if you just added a .com to your name in 2000 or 1999, you instantly became a 100 million, $1 billion company, right? It was just insanity because it was the advent of the internet. We've seen it happen with the marijuana stocks when they first came out. That was the hottest thing. The solar stocks, when they first came out, it was the hottest thing. So right now, this is the hot thing, and it's coming at the right time where there's a risk appetite, right? So we have a situation where we've seen Bitcoin rally almost 100% off the lows. We've seen the shit coins or the meme coins kind of rally off the lows with massive people just willing to gamble. And it basically tells you people are willing to take these risks again. So it feeds right into that thing of saying, hey, listen, has AI in the title. It's so sexy right now. Let's rip it to the upside. Let's buy it no matter the valuation.
May gray turned to June gloom on Thursday as crypto prices veered slightly into the red. Bitcoin, the largest cryptocurrency by market capitalization, was recently trading at about $26,950, down 0.5% over the past 24 hours, and the second consecutive day, BTC dropped below $27,000, according to CoinDesk indexes. The inauspicious beginning to June carried over the downward trend from May, when Bitcoin's price dipped almost 4% to break a 4-month streak of gains. Hello and welcome to Money Talks. In today's video, Gareth Soloway believes that we are currently still in the bear market for Bitcoin, and it will go further down. He also covers the future of the debt ceiling and the Fed next moves on the interest rate.
And let me just put this in perspective. If you go back to 2021, NVIDIA was up 200%. Bitcoin went from, basically 20,000 to 65, 69,000, right? Same thing with other ones, AMD or a Microsoft or all of these, they were all running together. So it was a very clear risk on trade. You are not seeing that this time in Bitcoin. And what that means to me is, so I think there's a big disconnect with actually what investors want Bitcoin to be. Is it a risk asset? Well, sometimes, like we've seen, it goes up with tech, or sometimes it goes down when tech. For instance, today, right? Today, Bitcoin is down, tech is up. On the other side, we saw a few times where the banks were collapsing and Bitcoin went up. So is it a safety asset or is it a risk asset? Which one is it? And investors can't decide. And when investors can't decide, that is not a healthy place to be in the market. So again, the biggest thing to me is this chart continues to hold underneath 30,500. You've got bearish consolidation starting on this chart. We break this 25,900 level. You're going to get a leg down probably to about 24 to 23,000, which is your next support. And I will say this is that the hype when we were at 30,500, people were going nuts. I even commented, I think to you in one of our interviews, that it was reminiscent of the hype that was at 69,000, the same sort of buzz. And to me, that was a negative divergence, because if you're at this lower price and you have that same level of hype, and we know what happened there, it's likely going to repeat here. And I still am in the camp that I don't necessarily believe the lows are in on Bitcoin just yet. People, there's nothing more that has a bigger cult following than crypto. And I love crypto long-term. I love specifically Bitcoin long-term. I really do think it will mature into the digital gold. I plan on holding a ton of it at the right time. But that doesn't mean, again, if you look at 2017, when we topped out there, we pulled back in that bear cycle to 3,500. And then we went back to 10,000, which was basically a triple. And then we went back and retested the lows. So, I mean, you can't say, well, it tripled back then off the lows and retested, but in this case, it's up 100%, but it's not going to go back. The logic just isn't there in that situation.
As the summer season arrives, an unexpected heat wave is gripping financial markets. This heat is coming in the form of the U.S. dollar index, DXY, which has been on a remarkable uptrend since late April, reaching levels unseen since early March's banking crisis, when the dollar wrecking ball wreaked havoc on asset prices. This surge in the dollar has raised concerns among market participants due to its high inverse relationship with Bitcoin, a topic many macro and crypto analysts have discussed repeatedly in 2023. The implication of this inverse correlation means that when the dollar rises, BTC falls, and vice versa. The chart showing the year-to-date performances of DXY, blue line, and BTC, orange line, underscores this relationship a step further. Notice how Bitcoin's 2023's performance has been propelled by a downward dollar. Not coincidentally, the DXY reached its year-to-date low near 100.80 on April 13th, nearly the exact date BTC reached its year-to-date high of just over $31,000. Since then, however, both have been trending in opposite directions. Bitcoin's price finished May down 7%. Data from monitoring resource CoinGlass shows something of an average performance for a highly varied month. The largest cryptocurrency is 5.5% lower in Q2, contrasting Q1 gains of over 70%.
Yeah, so before last week, I was in the camp that they were on pause, and then we saw the Fed funds rate spike to 66%, banking in another rate hike. But I believe the latest is that it's come down to like 30% or so, which means the Fed likely won't be hiking, right? So the Fed, I think, is very aware of the struggles in the banks, which, by the way, investors are ignoring. If the Fed is being this cautionary with the inflation numbers that we've seen come out recently that have shown that we do have elevated inflation sticking around, and they're still not wanting to hike, to me, that probably tells us there's more stress in the financial system than we're being led to believe. So for me, again, it seems like they're on pause here. They say they might hike later in the year. I think that's just a fallacy to basically keep the markets from just going nuts to the upside and becoming another bubble. But I ultimately think they probably are concerned. They're looking at the tech stocks, what's going on there. They're looking at other things. They're looking at stress in the banking system. And I think they have a lot of problems on their hands, frankly. I do not envy them one bit. I would not trade places for $1 billion. Yeah, I think that was a mandate that subconsciously or consciously they thought about a long time ago. But I think what we've seen with inflation, there's been this changeover where they start to realize that the inflation is a bigger hardship for people that can't afford it, meaning that if you're lower or middle income and you don't have a lot of investments, then inflation is a killer to you. So I think there's been a little bit of subconscious or maybe conscious change in how they're doing policy, where they're not as worried about the stock market, assuming it doesn't go into free fall. Like when the markets were down 20, 30% last year, I don't think they worried about that. If we went down 50, yes, now you're talking about a cataclysmic issue that they would be concerned about. But I don't think it's the same mentality as it was years ago. I think they had this mentality that it was a trickle-down economics or trickle-down investing. The richer got rich with investments. They would eventually feed down the slide. I think that thinking has changed. Whether it's part political with the new administration, I don't know, but I certainly think it has changed.
So, is it a good time to invest in Bitcoin, and what's your prediction for Bitcoin in 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.